Welcome back to Trading Hour. Well, as promised, Ashi Anand, CEO and founder at IME Capital, joins us now to discuss market fundamentals as well as the top sectoral picks. Thanks so much for joining us, Ashi. First up, from the last time you connected with us, there's been a significant change as far as valuations are concerned, and valuations now are a lot cheaper. Have you started deploying capital, and which are the sectors or names that you like at the current levels?
Hi, sure. Thank you. First of all, thanks so much for having me on the show. So yes, valuations have kind of corrected, but I think it's also just important to understand the extent of valuation correction in the context of the larger kind of move. So if you're looking at kind of from pre-COVID levels, right? So we're not taking from the COVID low. You have kind of large caps having moved up about 120%, the BSE 500 up about 160%, and small caps up about 300%. Now, if you're looking at the correction in large caps are just a little over 10%, BSE 500 at about 15% and 20% for small caps. It's not necessarily that valuations have corrected enough to make markets cheap or really attractive. Also, in the context of the kind of various headwinds that you are seeing in terms of slowdown in overall economic growth and corporate earnings, uncertainty around Trump, FI outflows, etc., we do kind of believe that markets may remain a bit more muted in the near term. And accordingly, we are being a bit slow in terms of deploying some of our capital. An important element is we are starting to see certain green shoots. GDP has recovered in the third quarter. You are seeing oil prices having fallen. And also importantly, Trump has backed down a bit in terms of tariff aggression. So it is going to be a market which is going to be a bit kind of muted and volatile in our view. And we will accordingly be looking at kind of deploying capital accordingly. In terms of the specific kind of sectors and segments that we are effectively looking at deploying, or the places that we are finding more attractive at this point in time, I think banks clearly, and banks across different segments, right? Be it the high quality franchises, which are available at much cheaper valuations than they have been historically. Or if you're kind of looking at kind of banks with MFI exposures, which have corrected quite significantly, there are a lot of interesting opportunities out there. We continue to like digital from a longer term perspective. These are kind of probably the two major kind of sectors we're really focusing on. But the other kind of important element is that as CapEx, real estate, defense, and capital market kind of companies are correcting, these are all segments with a lot of business momentum that we find quite attractive from a longer term perspective. If these kind of correct more, we may actually look at kind of deploying some additional capital there.
Okay. Do you want to elaborate a little bit more? You spoke about slow capital deployment. How much should one be deploying, and what is the near-term outlook? Like deploy every week, or do you think there is going to be another impending correction? And then a little more detail about the stocks that you're investing in.
So the main point is that we have about kind of 6 to 7% cash across both of our portfolios. It's not so much the pace of when we're deploying, we're really kind of looking at kind of news flow and seeing how news flow evolves. An important element is kind of some kind of clarity around how Trump and kind of tariffs, how is this actually going to settle, right? Right now, there's just a lot of noise. It's a lot of posturing. You really need to understand where that kind of settles. I think that's one important element. We are closely kind of monitoring what's happening in terms of growth across different segments. You have seen a kind of growth slowdown, but you are also seeing some segments where growth is coming back. So I think more than specific time, we're really waiting for certain kind of news flow to actually emerge. And as you get some clarity around both growth, interest rates, and kind of geopolitical related to tariffs, that's kind of where we will get a little more comfortable deploying more aggressively. I'd rather not talk about, especially from a capital deployment, kind of specific stock names, because obviously these are companies that we are looking at possibly investing in, and we can't, from a compliance perspective, speak specific stocks. But broadly, in terms of kind of segments that we are actively kind of looking at, those are kind of banks, listed digital platforms. We are also kind of monitoring certain consumer and IT companies that we find attractive. And capital goods, real estate, capital markets, if some of these companies correct more, we'll clearly be looking at deploying some more capital there.
Thank you so much, Ashi, for joining us, giving us a sense of how you're looking at markets at the current junction and which are the sectors that are looking attractive to you. Well, moving on, time now for a short break. Pawan Goel from Naukri.com joins us next to discuss the latest trends in hiring and the job market.